Piper Sandler Global Exchange Conference. This is where the heads of all the exchanges, ICE, NASDAQ, and the trading platforms like Robinhood and market makers, they all get together to talk about what's going on in trading. So let's talk to one of the leading market makers in the world. Doug Sifu is the CEO of Virtu. What are you, number 2 in the world here, market makers?
Yeah, we could say that,
there.
very much.
Volatility has been low. VIX is 13. Usually that means lower trading activity, but you see all. Tell us what you're seeing. What's going on with trading right now, and what's going on with retail investors right now? What are they doing?
Yeah, it's a great question. You know, we're seeing a significant interest and a significant amount of participation in lower price stocks. And obviously, within the last couple of weeks, you know, Roaring Kitty has come back, and so you saw a brief surge of interest in GME. But really, the story in the last quarter or so has been the sub-dollar stocks. I think they're of interest to retail. They're low priced. You can buy a bunch of them. And so a significant portion of the volume that we see during the course of the day from retail has been in these sub-dollar names, and it tends to distort a little bit the overall volumes of the marketplace.
Why is there an explosion in sub-dollar stock? It distorts the volume activity, but is this related to the mini meme stock rally that we've seen? Are they sort of correlated?
No, I don't really think so. I think it's just, you know, retail always has an interest in lower price names. They're a little more affordable. You know, you can, you know, if you need to buy on leverage, that you can acquire a larger position. So it's always been of interest for retail investors to have that. What we've seen, though, is like a balance in retail flows. You know, where at the end of the day, the buys and the sells kind of have evened out. So definitely there's interest, but you don't have the same situation like you did in 2021, where you have these sharp movements, where you had, you know, meaningful imbalances in the buy and sell volume.
So this mini meme stock rally, as I like to call it, how does this compare to the trading activity in 2021? It seems like the reverberations are smaller than in 2021, but what are you seeing? What's the trading telling you?
Yeah, I think that's right. As I said just a second ago, the buys and the sells are more balanced than they were in 2021, and the reverberations, as you put it, to other names, other meme type of names, have not been as pronounced. So you saw a little bit of a bounce in some of the other names, but it hasn't rippled through to 20, 30 names like it did in 2021, and it has not, to date, been as sustainable.
And why is the reverberations smaller? Are the people who participate in this smarter and wiser? Are they moving on to AI stocks? Or why is it different?
Yeah, I think people learned lessons in 2021. I mean, there's always the periods of exuberance, and then these stocks tend to come back to real value. And so people that buy at these highs, you know, have a trading loss and a bad result. So I think people learned that, like, the highs don't always maintain. And so therefore, you know, they're a little more cautious about getting in.
One of the big topics here is artificial intelligence and how it's affecting trading. I've been on your desk. You literally employ rocket scientists on your desk. Physics geniuses I have met on your desk. Code writer geniuses to write stocks.
Yep.
How is the advent of AI going to affect how trading, and particularly algos work? You employ algorithms in your trading patterns. Will AI hurt, or will it help the average investor? How is it going to be used?
I think ultimately it's going to help the average investor. There's a lot of what goes into our business, as you said. It's obviously based on millions and millions of lines of code that can be kind of rote, can be kind of redundant, et cetera. And AI and machine learning in particular allows us to scale and to be more efficient about what we do. Right? As you said, we've got rocket scientists, and it's hard to find the great rocket scientists. And so if you can leverage their genius and their excellence and their abilities by applying AI and machine learning to algorithms, and make sure that the algorithms are responding to the market real time, the markets have become so sophisticated, so intelligent, so fast that you know, humans intraday are really more risk managers than they are traders. And so the algorithm needs to be responsive to inputs in the marketplace real time, and that's where machine learning is so important to what we do.
I want to bring in my